Hey there, Market Mindset listeners. It's your host, Big Money Mike, and welcome back to another exciting episode of the Market Mindset podcast. Today, we're diving into some of the most significant market news that's been making waves over the past few days. First off, let's talk about CoreWeave, the AI infrastructure company that's been getting a lot of attention lately. Now, I know some of you might be thinking, CoreWeave, isn't that the company that just had a massive IPO and is riding the AI wave? Yes, that's the one. But here's the thing. While CoreWeave has indeed seen explosive growth, with revenues jumping from $20 million in 2022 to $1.9 billion in 2024, there are some red flags that you need to be aware of. On one hand, CoreWeave's pivot from crypto mining to GPU-based cloud computing in 2022 was a genius move, especially given the surging demand for AI workloads. They're now serving big names like OpenAI, Microsoft, and Meta, and their vertically integrated platform is delivering some impressive performance numbers. However, their heavy reliance on Nvidia, which holds a 5% stake in the company, presents some concentration risks. All their customer contracts mandate Nvidia hardware, which could be a double-edged sword. Given these mixed signals, I'd advise caution here. While the bull case for CoreWeave is compelling, especially with its strategic partnerships and high-performance AI infrastructure, the potential risks and dependencies on Nvidia make it a stock to watch carefully rather than a must-buy. Moving on to some other interesting news, Qualcomm just made a significant move by agreeing to buy AlphaWave, a semiconductor company, for $2.4 billion. This deal is expected to be completed in the first quarter of 2026 and is already getting a thumbs up from investors. AlphaWave specializes in high-speed connectivity technology, which could be a game changer for Qualcomm, enabling faster data transfer with less power consumption. This could potentially protect their margins and enhance their business scalability. Now let's switch gears to something a bit more futuristic, Joby Aviation. This eVTOL company is making waves in the nascent electric vertical takeoff and landing aircraft industry. While it's exciting to see innovation in this space, the path to scaling is fraught with challenges. The latest news highlights the need for caution as Joby Aviation navigates regulatory hurdles and operational complexities. It's a company to keep an eye on, but it's not without its risks. Another stock that caught my attention is Cameco, the uranium fuel and nuclear energy services company. Cameco's shares surged recently, partly due to its exposure to new nuclear technology and standard nuclear reactors. With the world increasingly looking towards cleaner energy sources, Cameco's position in the market is becoming more significant. This could be a solid long-term play, especially if you're bullish on the nuclear energy sector. Now, let's talk about a stock that's been making headlines for all the wrong reasons, Circle Internet. Jim Cramer recently weighed in on this one, saying the stock is too hot to buy at current levels. Circle Internet's stablecoin, USDC, is a more transparent and less sketchy alternative to Tether's USDT, but the company's valuation has swollen dramatically since its IPO. Cramer's advice is to wait for the stock to cool off before considering a purchase. Given the volatility of the crypto ecosystem, patience might indeed be a virtue here. Finally, let's look at some broader market predictions. As we approach November 6, 2025, there are several factors to consider. The S&P 500 and Dow Jones have been showing resilience despite economic uncertainties. With the latest shipping activity from China to the US flashing hopeful signs, there's a possibility that these indices could continue their upward trend. Here's my take. The S&P 500 might see a slight uptick as we head into the fourth quarter, driven by continued strength in tech and AI sectors. The Dow Jones could follow a similar trajectory, although it might be more volatile due to its broader market representation. Other major indices, such as the Nasdaq, are likely to be influenced by tech giants and their performance in the AI and semiconductor spaces. For a stock recommendation, I'd suggest keeping an eye on Cameco. With its strong fundamentals and growing importance in the nuclear energy sector, it has the potential to be a steady performer in the long term. The recent surge in its shares indicates investor confidence, and as the world continues to seek cleaner energy solutions, Cameco's position looks increasingly promising. That's all for today, folks. Remember to stay informed, stay cautious, and always keep your eyes on the market. Until next time, this is Big Money Mike signing off. Keep your investments sharp and your mindset sharper.